Okay, guys. In this video, I'm going to explain the market maker buy and sell model. Okay, this is the ICT model. In fact, this is like the first model that I learned, and I didn't pay a lot of attention to it. Um, but in the last 1 or 2 weeks, having spent a lot more time on the chart, backtesting, I realized that this model is probably the most important model that ICT teaches. Okay. Um, I first learned this model back in November last year, early November last year, I think. Initially, it was a little bit confusing, but having looked at the charts, it was the first model I tend to see play out. Okay, but eventually I abandoned it and I tried to make things a bit more simpler. However, I think that this is the model that you would find extremely helpful if you are still struggling with differentiating between break of structure and liquidity sweep. I think if you understand this model, how they tend to play out, you will be able to easily differentiate between when there is a break of structure and when there is a liquidity sweep. Okay, so I'll try my best to make it as simple as possible, and I'm going to show you guys a lot of examples so that because they tend to play out, there are different scenarios, there are different things, there are different ways in which they play out. Okay, so I'm going to try my best to simplify it and make it as simple as possible to understand. Okay, so this is the model that the inner circle trader teaches. He has quite a number of videos on it on YouTube. The thing is, a lot of his videos, there are a lot of gems in it, but those gems are scattered between different videos. Okay, you would need to watch pretty much all of his video to to get everything. And a lot of what I'm going to be sharing are things that I discovered from some of his videos. Some of them are not even based on this model. Some of them are maybe based on market structure, but when you put all of it together, then you begin to see how clean and clear this model is. Okay, so the first thing that you need to understand about this model is the initial consolidation usually kickstarts the model. This initial consolidation that you have here. Okay, so that initial consolidation is usually what I am always watching for. Now, how do you anticipate that? No, not every consolidation will begin this model. Not every consolidation will lead to a market maker sell or buy model. Now, the way that I tend to know when a market maker sell or buy model is beginning to play out, or the way I anticipate it is when that initial consolidation happens just before an important key price level. Okay, and then price runs away from it without getting to that price level. Maybe price front run a level. Okay, this is generally what I used to know when a model is playing. And I'm going to show you a lot of examples on the chart. Okay, so when you see that initial consolidation, that consolidation will happen at a level of just before it gets to an important level. For example, if there is a fair value gap or an order block that you are watching, you want to go long, and then price consolidates before getting to that fair value gap or before getting to that order block, or it could be an optimal trade entry. Maybe you draw your fib from the high to the low, you are waiting for price to trade back down into discount, and then price fails to get to discount. Before it gets to discount, it begins to consolidate and then moves away without dropping to where you want to go long. Okay, maybe a fair value gap, another block, or an OTE. Okay, when I see that, I begin to anticipate a market maker sell model, to come back down to take out the consolidation low into that initial price level where I'm looking to go long. Okay, this is a holy grail. If you wouldn't understand anything at all about this model, this is what you need to know. Okay, you need to understand that the model begins with the initial consolidation, and that initial consolidation usually happen just before an important price level. It could be a fair value gap, it could be an order block, it could be an optimal trade entry. Okay, so usually price will front run that level. Okay, so you are expecting price to dip or fill a fair value gap, and price fails to. Instead, it begins to consolidate before it feels it and then runs away without feeling it. Okay, you begin to anticipate a sell model. Okay, so both buy and sell model begins with the initial consolidation. Okay, and then there is going to be a run to a level of support here. Okay, or up if we are looking at the sell model. Okay, and then um at this run to support, usually there may be a run on stop. Okay, it might just simply be an optimal trade entry between the high of the consolidation and the low that forms, or it can form a short-term low and then sweep the short-term low. Okay, so price will consolidate, run down or run up to a level of support or resistance. Or let me just focus on the buy model first and foremost. So price will consolidate just before getting to an important price level. It could be a fair value gap, another block, OT, whatever. And then to run away from it and then pause. Inside of that pause, usually price would form a short-term high and then sweep the short-term high and then run down again to another level of support. Okay, that level of support can also be a fair value gap, an order block, or an old low. Generally, most of the time, it usually happen at an old low. Okay, the characteristics of this run to support or pause is that sometimes it will retest the low of the consolidation, the low of that initial consolidation, but price will move back up to retest it. Some other times it will just fall short of it. It will move up, but it won't get there and then immediately rejects away, takes out the low it forms and continue lower to an important price level, which can be a fair value gap, another block, an OTE entry, or any other key level, right? Now, the important characteristics of this smart money reversal is SMT divergence. Okay, that is the most important thing. Okay, so when you are watching for smart money reversal, usually there would be an SMT divergence between that pair and another pair that is closely correlated to it. It could be, for example, if you are trading EU, there would be an SMT divergence with GU. If you are trading GU, there will be an SMT divergence with EU or sometimes DXY. Okay, so if DXY makes a lower low, normally you would expect that. I mean, if DXY makes a lower low, normally you would expect that this should make a higher high. So if it makes a lower low, then that tells you that that is an SMT, and you begin to anticipate this model completely and playing out. Okay, so after the smart money reversal, there would be another level of accumulation or low risk buy. The low risk buy is basically a return to OTE, a return into discount, or a return to a fair value gap, or a return to a breaker or mitigation block. Okay, and then after that, price would run away again and sometimes to form a short-term low and then sweep the short-term low. That is like the second stage of accumulation. So this is like the first stage of accumulation. This is the second stage of accumulation. And then you are going to have distribution. Okay, so the first thing is the initial consolidation, the run to support or a pause, and then the smart money reversal. And then once you see the smart money reversal, you begin to anticipate that price is going to take out the initial consolidation. Now, let me also say something about this initial consolidation. I like to see equal high. Okay, when that initial consolidation is forming and you see equal high forms, oh, that gives it away. That ultimately gives it away. That is what I love to see. Okay, it gives me a lot of confidence. If I take a trade here, it gives me a lot of confidence to hold on until that high is taken out. Now, let me also say something about the initial consolidation. That initial consolidation sometimes can be a small consolidation or an extended consolidation. I will show you multiple examples on the chart, all right? But I'm just trying to like go over all the basics. Then when I get to the chart, I'm going to re-emphasize the important things you need to know as well, okay? So this initial consolidation, usually price will create an equal high. Okay, I like to see that. Two things I like to see to qualify my initial consolidation. Number one, I want to see that consolidation happen before an important level. Okay, maybe before a fair value gap is filled or before price reaches back into premium or discount. Okay, I like to see that. Okay, when you see that, when you are expecting price to drop into discount and it fails to and moves away, without filling your entry, you begin to anticipate that you know a buy model might take place to take out that high. All right, and usually to form an equal high. Okay, to form an equal high just before moving away, and then it will move back up. You think that okay, it's like it's coming back to your entry, and then creates a short term high, takes out the short term high and then moves away. Sometimes it might not even form a short term high. It might just be a simple retracement to nowhere. Okay, it shouldn't retrace to anywhere. That's the classical characteristics of this run to support. Okay, this level. Okay, it will just run to a level of support, to bounce from it and retrace to nowhere. Sometimes it will be a return to the low of this consolidation, or you just be wondering, okay, where is it going to? Or um, it just wouldn't bounce from anywhere. You look at, okay, where is price? This rejection there wouldn't be anything significant that is rejecting price most of the time. Okay, and sometimes it may be a fair value gap or another block or a breaker, wherever, and then it runs away to another level. Most of the time, I've realized that smart money reversal used to happen at a weekly high or low, sorry, a weekly low in this case. Okay, if you're looking at the buy model, it will happen at a weekly low most of the time. Most of the time, smart money reversal would happen at a weekly low. All right, that's an important thing to pay attention to. And the other characteristics of a smart money reversal is that there is usually an SMT divergence at this level. Okay, so look at the pair you are trading and monitor how price paints around this level. Okay, so if we have two closely related pair, maybe EU GU, if EU makes a higher high, GU will make a lower low. Okay, if EU makes I say higher high, if GU makes a higher low, GU would make a lower low. Okay, I hope that is clear. So if EU and GU are trading at this level, one of them will make a higher low, the other one will make a lower low. Okay, so that gives you the SMT divergence. Okay, if you don't understand SMT divergence, I made a video on it. You can check through my channel, or I will also try to drop a link in the comments section so that you can easily find it, right? So after smart money reversal, price would move away This is usually a displacement. Okay, you see an impulsive displacement, and then price will return to discount or into a fair value gap or an order block. Okay, that is the first level of accumulation or low risk buy. Okay, this is usually when you want to enter. Okay, generally when price is dropping, it will be look so aggressive that you wouldn't want to go long at this level. And generally, it's always better to wait for that break of structure. There will be a break of structure, and then price will return back into discount or into a fair value gap or another block or a breaker. Okay, that is the typical characteristics of this level. Now, which one should you use? If there is a sweep of a high, if there's a liquidity sweep, I like to use the breaker. So even if there's a fair value gap before the breaker, I like to wait for price to trade into the breaker. Now, there are times when it doesn't and it just moves and I miss out of that trade. But most of the time, when there is a sweep, when there's a liquidity sweep, price will tend to return to the breaker. Okay, if there is no liquidity sweep, price will tend to reject from the fair value gap. Very rarely do price trade all the way back up to the order block. Most of the time, it either rejects from the breaker or it rejects from a fair value gap. Now, once you have the first accumulation, then there will be another level of accumulation. That second level of accumulation usually coincide with this first, run to support right here. Okay, used to be at the same level most of the time. And this level, usually you'll be anticipating that maybe there might be an order block at this level. Okay, and you'll be thinking that price should reject from the order block. You'll be looking to maybe go short at that level. For those that do not understand the buy model, okay, you think that okay, this is an impulsive move, this is a displacement, and then maybe there is a liquidity sweep here, you want to go short, but price basically consolidates a little bit at that level and then shoots up aggressively to take out the initial high. Okay, so this is the market maker buy model. Okay, this is the market maker buy model. Now, after the buy model, usually depending on what has happened in here, okay, you can anticipate a sell model to take out the low, right? Depending, remember I told you that the important thing you need to pay attention to as far as the initial consolidation is concerned is where it is taking place. Okay, you are expecting price to trade into discount. I mean, you are expecting price to trade into premium. Price falls short of it, consolidates, and then moves away from it without getting to discount, I mean to premium rather. Or there is a fair value gap, you want price to fill to go short, but price fails to do that. Okay, you begin to anticipate a potential buy model. Okay, so if at this level perhaps there is a fair value gap below this level that price fails to get to, and then consolidates a bit and then moves away, takes out that high, you begin to anticipate a market maker sell model to take out the low and fill the fair value gap below this level. Okay, don't worry. By the time I show you examples, you understand better what I'm trying to say. So this is the buy model. So let me quickly now, another thing you need to understand about this model is that not all of these stages will take place. Okay, not all of them. The important one is the initial consolidation, the smart money reversal, and the distribution. Initial consolidation, smart money reversal, and distribution. Okay, so sometimes you won't see this, sometimes you won't see this. So the red, the blue levels are not important. They're important, but sometimes you won't see them. Okay, especially on a high impact news event. Okay, if assuming there is CPI or there is FOMC or non-farm payroll event at this level where you see the smart money reversal, usually price will just shoot up to take out the high. without all these pauses. Okay, so the important level is this level, the initial consolidation, the smart money reversal, and the distribution or sweep of that initial high. Now, sometimes price may reverse at this reaccumulation stage. Okay, price may reverse and come back down to take this low. Okay, so that's something you need to pay attention to and you need to anticipate as well. Okay, but generally, most of the time, this is generally what tends to play out. But sometimes the reaccumulation stage may be a trap. Okay, instead of it taking out this high, it will just completely reverse and take out this low, especially when we're in a bearish market. When we're in a very bearish market, okay, this reaccumulation stage will turn into distribution and then it will reverse and come back down to take out this low, right? Okay, and I think those are the important details you need to understand about this model. Okay, so let's go to the market maker sell model. Okay, so the sell model, um price would generally begin with a consolidation. Remember, that consolidation will happen at a level just before a key price level is traded to. Okay, so if there is a fair value gap at this level, be it a daily, a weekly, a 4-hour fair value gap, or no, price is fractal. Okay, it doesn't matter the time frame. So you are waiting that okay, when price fills that fair value gap, you want to go long. Okay, and then price consolidates, fails to get into that fair value gap, and then runs away from it, and you feel like, oh God, I have missed this move. Okay, that is when you should begin to anticipate a potential sell model to come back down to take out that low. And then when that low is taken out, you anticipate smart money reversal. You anticipate beginning of the second leg of a buy model. Okay, so if there is a fair value gap here, let's say weekly fair value gap, price consolidate before the weekly fair value gap, fails to fill it, and then moves away. You begin to anticipate a market maker sell model that will come back to take out this low. Okay, so this is the first leg of the model, and then this is the second leg of the model that fills this low. After that market maker sell model is complete, you anticipate a buy model to take out the initial high. Okay, remember that fair value gap is a level you are looking to go long initially. What has happened is that this initial consolidation is the algorithm is trying to build orders that will allow smart money to get in here at this second leg. So once they accumulate, once they take out this low, they accumulate there, smart money reversal, they will then come back up to distribute at this level or at this level. Okay, so this is the sell model. Okay, this is the sell model. So let's go into the charts and then I will show you, multiple examples of this. Um, I'm going to start with the BTC chart because this is the very first model that I saw live and it's played out. Okay, for those of you that knows me, when I was in Crypto Academy, majority of you who are watching video are probably not don't know what Crypto Academy is, but that was pretty much where I first learned to trade. And I can remember this November when price was trading here, and I mentioned that price is most likely going to trade back down to below this price level 28k. Okay, I've been shouting 28k all the way when price was trading here back in early November. Okay, when everybody was shouting 100k 100k, it was this model that I saw. Okay, I learned this model late in October. That was the first thing that made me know about ICT was that model. Okay, somebody posted the market maker model on the on Twitter. Okay, somebody posted this picture on Twitter. Okay, so I feel like, what is this? That name, inner circle trader, caught my attention. It caught my attention, and I felt like, inner circle trader. So I went to look for him on Google, and I came across his YouTube channel. Okay, the first set of videos I watched was his market maker series on YouTube. It's a really, it's well detailed, and I would actually recommend you also go through if you want to have a good understanding of the model. Okay, um, and there it was explaining this whole buy and sell model. And when I looked at BTC charts on a daily time frame, I immediately knew that this is the model that is likely going to play out. And it was at this point that I started to sell off my crypto holdings. And I'm glad I did. I'm really glad I did, because I can't imagine how much I would have lost, if I was still holding on to my bags. Okay, so this is a sell model from this level to this level to take out this low. Okay, so remember I mentioned, so let me just annotate this. Look at this equal low. Okay, remember I mentioned that when you are expecting price, two characteristics of the initial consolidation is that um price would form an equal low or a relative equal low. Okay, and then move away from it, right? And it tends to happen when you are expecting price to move into a particular level and it fails to. Okay, so let me annotate this. I need to annotate, like, well, I'll show a lot of examples so it doesn't take too much time. So here you see the initial consolidation. Okay, and then price would all of a sudden move away from that initial consolidation and then come back down to retest it. That retest is the run to resistance. Okay, so initial consolidation, run to a level of resistance. Now, when price runs to that level of resistance, it can be a fair value gap, as in this case. It can be a breaker, it can be an order block, it can be anything. Okay, so in this case, you can see that this is a fair value gap. Okay, so you have that initial consolidation. Let me just annotate this one so that you'll be able to relate. Okay, so this is that initial consolidation. Remember I said usually it will form an equal high or a relative equal high, and then it will move away from there to a level of resistance. Okay, it can be not, you can see that this is also an order block and a breaker as well. So once it moves to that level of resistance, that is the move to resistance or pause. After that, usually price may or may not come back to retest the initial consolidation. Okay, it may come back to retest the initial consolidation, it may not. Okay, so usually there will be some kind of optimal trade entry from, once you just identify a low and the high, you know, after moving to that initial resistance level, there will be an optimal trade entry. Okay, a drop down below the 50% level, or if you move it from here to here, generally price would just basically pause a while and then it will now move up to an old high. Okay, so Like I said, smart money reversal typically happens at an old high. Okay, a weekly high, a monthly high, or wherever. Okay, so smart money reversal, the way I validate smart money reversal is if there is an SMT divergence at this level or there is a break of structure. Okay, so after this high is taken and then price breaks this low, you begin to anticipate that price will trade back below this level. And this is what I saw. This is why I've been saying that BTC is going below 28K. Okay, this is pretty much what I saw. And after that, you anticipate that price would return to a breaker. In this case here, it returned to a breaker. This is a high, this is a low, this is a higher high. So this is a breaker. Okay. So once price trade below the low, it returns into a breaker. That is your low risk sell. Okay, that is low risk sell. This is a market maker sell model. This is low risk sell. Okay, so usually there will be a little bit of accumulation, sometimes to just be a return and then run a drop away. Okay, so this is your low risk sell, and then after that there will be another layer of accumulation. Most of the time price would form a short term high and then sweep the short term high. Okay, and this can also, you can also use this as your initial level. Generally for this level you can also um wait for a liquidity sweep, but not all the time. You won't say liquidity sweep all the time. Sometimes it will just be a small return into a fair value gap and then aggressive drop down to take out that low. Okay, so this is your reaccumulation, or you can also refer to the whole of this level as your reaccumulation. You know, the whole of this is your area of reaccumulation. And then the last level is the distribution, where price drops back down below the initial consolidation or the relative equal highs that forms. Okay, and that completes the sell model. Okay, the important thing you need to know here is this initial consolidation usually will form a relative equal low or an equal low, perfectly equal low or relative equal low, moves away to a level of resistance, a fair value gap, an order block, an optimal trade entry, wherever, and then it will retrace a bit. Sometimes it will come back down to retest the initial consolidation low, high rather, and then moves away to take out an old high. At that old high is where you anticipate smart money reversal. Now, smart money reversal, usually you would see an SMT divergence or you wait for a break of structure. You don't have to enter here, okay? You can wait for this break of structure and you go short. When price returns to a breaker, remember I mentioned that I like to use a breaker when um there is a liquidity sweep. So if you have a high, a low, a higher high, the first down close candle is the breaker. Okay, the down close candle before that high is taken is the breaker. Okay, so you can go short there or you can wait for price to trade into the fair value gap, okay, to go short, right? And then after the low risk sell, there will be um another level of distribution. Okay, so price would create short-term highs, take out the short-term highs before it then eventually take out that initial consolidation low. Okay, I hope that is clear. Now let's inside of this cell model, there is also another cell model here. So here we have the initial consolidation. Remember I said price will tend to create relative equal lows. Okay, and then it will run away to a level of here BTC was in price discovery, so there's really no level of resistance. But the way you can anticipate it is to draw if you draw a fib from the high to the low, and you the measured move, okay, the measured move either 2 point or 2.5, when price trades in there, that is generally when you tend to see the run to resistance. So this 2.0 is going to serve as a level of resistance. Okay, so that is the second stage. Remember I also mentioned that the level of resistance sometimes would drop back down to retest the high of the consolidation or fall short of it and then moves away. Okay, and then here you have the smart money reversal. Okay, remember I mentioned that the smart money reversal, the most significant thing about the smart money reversal is that there is usually a run on stop. Okay, some kind of tortoise. All right, so here you have the smart money reversal, and the low risk sell is usually price returning into a breaker, a fair value gap, or an order block. In this case, it returned to both a breaker and a fair value gap. You can see right there. That's a fair value gap. So it's returning to a fair value gap. That is a low risk sell. Okay. And then after low risk sell, you are going to have a level of distribution, forced distribution, okay, or like some kind of pause. And then you are going to have redistribution. Now, at this level, you would anticipate that price should take out these relative equal lows to complete the model. Okay, but sometimes this level will reverse. And once you see a reversal, you begin to anticipate that this high would be taken out. And that is pretty much what happened. Okay, like I said, you begin to anticipate a buy model, the second leg of a buy model that will come back up to take out this high. Okay, I hope that is simple enough. Consolidation run to level of resistance, smart money reversal, run on stop, return to fair value gap, low risk sell. Another level of accumulation, there will generally be a pause. Okay, price will basically just pause and then moves away to complete the model. Okay, ideally you want to see a run below this level. Now, when you fail to see that run, you begin to anticipate a buy model to take out the initial high that started the move. Okay, I hope that is simple enough. Okay, so here you have a sell model, here you have a buy model, here you have another sell model on BTC. Okay, so let's look at EU. Let's look at examples of this on EU. When I posted this chart, when price was trading here, okay, I posted, let me see if I can find it. Let me see if I can find the chart just so I can show you. Just give me a minute. I think that was like a few weeks back when I mentioned that I am anticipating a market maker sell model on GU. I think I can't find the charts right here, but perhaps when I see it, I would drop it. Okay, so let me. I think I'm going to use it as an example because it's really going to explain the Okay, so let me share my screen with you so that you would be able to see it clearly. I think it's really going to explain the model. A lot of the things I've been explaining so far, it's really going to make it much more easier for you to understand. Okay, I hope you can see my chart. Yes, this right here, when price was trading here, I did mention that I'm anticipating a sell model on GU. Okay, at this particular price level, there is a 4 hour fair value gap. We're looking to go long the previous week. Oh, no, I mean, that week, we're looking to go long on Monday. I was waiting for price to drop back down into um into this fair value gap, right? This 4 hour fair value gap. Price failed to drop into it, consolidated, and then moves away. Immediately I saw that, that is my typical signature. That's how I tend to know when a sell or buy model is beginning to play out. When I expect price to drop into a level, maybe drop by, when you take a fib from this low to this high, this level where there is fair value gap is a discount level. Okay, so you want price to drop back down for it to go long. Okay, we're looking to go long on, if I'm not on my Telegram chart, you might not, this might be new to you, and um, I would advise that you join in. Okay, so on that particular week, we were looking to go long on GU, wanted price to fill the 4 hour fair value gap, and then take a long to take out the weekly high and the daily fair value gap, and then potentially look for sell trades at, at the daily fair value gap. Okay, so that was the plan. But price failed to drop into the fair value gap. It failed to drop into the fair value gap. Instead, it consolidated just before it and then ran away from it without giving us an opportunity to enter. Right? When I see that, I begin to anticipate a market maker sell model that will come back down to take out that initial consolidation. And when it does, I anticipate another market maker buy model to take out that initial high. Okay, or at least to trade back down into premium of the high that will form between the smart money reversal and the low that forms here. Okay, so I want to re-emphasize again, what you need to understand with this initial consolidation is that it will happen just before an important level, before a fair value gap, another block where you are looking to go long, or a discount level, okay, maybe below 50%, above 50% level between the low and the high that forms just before the consolidation. Okay, so you have the initial consolidation, run to resistance, smart money reversal, accumulation, reaccumulation, and then distribution here. So let me go back to trading view. Okay, and you can see, that's pretty much what played out. Okay, let me pull back the. Okay, so that's pretty much what played out. So you can see that this is something I saw proud to it playing out. Okay, unfortunately, I didn't make money from it, and that's the thing. Okay, it's one thing to know what price is likely going to do, it's another thing to make money off it. Okay, obviously, I'm still a developing trader, I'm still learning. I started trading just about a year ago, so I'm still very new to this industry. But I've learned a lot in the last 1 year, and the one thing I'm still trying to work on is my execution, my psychology, my trade management, right? So this move right here is one that when you study it very well, it will really help you to understand the market maker models. Okay. Once you understand that the initial consolidation typically will happen before price will drop into an important level, it could be an order block, it could be a fair value gap. At this level, there is a 4 hour fair value gap. Okay, so let me show you on the 4 hour time frame. So right here, so this 4 hour fair value gap, we're looking for price to drop down for a potential three tap setup for us to go long, to target the I've removed those markup from my chart. There is a daily fair value gap at this level, okay, and that's pretty much where price rejected from. So we have that initial consolidation and they run to a level of resistance, okay, right there, and then smart money reversal. Once you have a break of structure, you anticipate that this low will be taken out, and once that low is taken out, if price has switched bullish, okay, you anticipate another market maker buy model to take out the initial high. Okay, so let me go back to the 1 hour time frame. So remember I said that after that initial consolidation, price sometimes will come back to retest the high of the consolidation or fall short of it, and then immediately runs away from it. And also remember, this is the mistake I made. I went short here, I took a short here, it was playing out. The mistake I made is not waiting for a liquidity sweep, right? And this is what I said I was going to share on the Telegram chat about what I would have done differently on this short. We actually took this short right here, okay, and it was playing out, and then it reversed all of a sudden and took out the high. Remember, I mentioned that the most important thing with the smart money reversal is a liquidity sweep. There was no liquidity sweep before we went short. The liquidity sweep is the signature, is the typical signature of the smart money reversal. That's what you want to always watch out for. Liquidity sweep. If there is no liquidity sweep, don't go short yet. Wait for a high to form and wait for that high to be taken. Sometimes there would be a three drive, okay, to form a high, form another high, then form a third high for a three drive setup. Okay, so the setup would either be a three drive or a three tap setup. Okay, so by three drive, this is what I mean. Okay, it will form a high, drop down, form another high. It might even break structure. Okay, that's the funny thing. It did break structure here on the 15-minute time frame. And we're looking to enter the fair value gap it formed. Okay, so that's a trap. Okay, when you are anticipating smart money reversal at a level, wait for at least one liquidity sweep. Sometimes it will be two. Okay, so price will form a high, drop down, form another high, drop down. It might break structure. So some people will think that okay, price is about to drop, and then they'll look to enter and they'll place their stop here. Sometimes there will be a third sweep. So there will be a three drive pattern before the um break of structure that would eventually kickstart the model and then begins to play out. Some other times it will be a three tap. Okay, it will be a three tap setup. Price will form a high, drop down, form a higher high to take out a high. Now, before this higher high forms, price might break structure on a low time frame, 15 minutes, or sometimes even on the 1 hour. You might see a break of structure and you think that okay, price is about to switch bearish, and then you go short and place your stop loss at this level, and then it takes you out. Okay, when you see a high forms, wait for price to take out a high, drop back down. It may or may not break structure, and then come back to that same level where it takes out a high for a three tap setup, right? Which is what happened here. It forms a high, takes out the high, drops down, breaks structure, and then retest that high. So you can go short here and use this high as your stop loss. So that is a typical signature of the smart money reversal. And then low risk buy is when price returns to a breaker, a fair value gap, or you can see from here that this is a return to a fair value gap. So you can actually refer this to the low risk sell if you want to. This can be referred to as a low risk sell. You can also use this. It can be a return to an order block, a fair value gap, an optimal trade entry, whichever. Okay, so that's the first accumulation, and then you're going to have another level of accumulation and then an aggressive run to take out the initial low. This last stage is usually very aggressive. Okay, at this level I was looking to go long because I was anticipating or thinking that we're going to have reaccumulation because of this highs. I got stopped out, and that's the thing. This is what I really wanted you to learn when I said I was going to make a video to explain what I could have done better with how this model played out. Okay, first, I didn't wait for a liquidity sweep. Okay, for smart money reversal, you always want to wait for a liquidity sweep. All right, and you also want to always expect that the model will play out. Okay, don't look to catch a falling knife. Okay, don't look to catch a falling knife, which was what I tried to do here and I got stopped at, right? And also especially when there is a level you expect price to trade into and it fails to trade into it, always anticipate a potential market maker sell model to take out that low. Okay, as an inexperienced trader, one of the struggles you would have is learning to trust the model, learning to trust it. Okay, learning to trust it, it will take a while. Okay, it will take a while. For me, I'm still learning, and with every experience I have in the market, it adds more to my learning curve, and I learned something new. I learned things that would mistakes I make now. I hope that I wouldn't make it again in the future. And that's the thing. That's give yourself time. That's what I'm trying to say. Give yourself time. Don't rush the process. Okay, while you are still learning, observe the market, you will make mistakes. Sometimes you will enter a bit too early and you regret it. Okay, but just learn from the experience and just add it to your arsenal and make sure you don't make the same mistake again. Okay, so remember I mentioned when I was explaining the model that once you see that price fails to fill a level where you are anticipating that price should drop into and it doesn't and then moves away, you anticipate a sell model to take out that low. Now, when that low is taken, you also begin to anticipate a buy model that will take out that high. Okay, remember I mentioned that buy models are typically um it will form an equal high. Okay, that's pretty much what happened here. This is initial consolidation. Okay, you can also group the whole of this as initial consolidation, but typically I like to use where I have a clean high, okay, which is this level right there. You can see the equal high. Okay, so this is the initial consolidation, run to a level of support, which is a daily fair value gap. Price will pause a bit. It might return back to the low of this consolidation or fall short of it, like you have it, and then run away from it. Okay, this run away is usually very aggressive. It's going to run away from it, and then we're going to have smart money reversal. Now, remember I said smart money reversal. The typical thing about smart money reversal is that it's going to happen at a weekly low or a daily low or a monthly low. In this case, you can see that it is happening below a weekly. This is Monday's low. It is happening below a weekly low. And remember, I also said that the smart money reversal typically there will be an SMT divergence. So when you check GU, I mean EU on the other side, you would see that at that same level, you can see the equal high, right? Let me show you here. So here you can see that here we have a higher high, and here we have, we have a higher low, and here we have a lower low. Okay, so the smart money reversal, typically you would see SMT divergence. Okay, if you don't know what SMT divergence is, I have a video, a really thorough video that I made on it. You can check my channel um to watch it, to see the video. Okay, so another typical characteristics of a smart money reversal that I also mentioned is a run on stop. Okay, you can see here, if there is no run on stop, like I said, smart money reversal is not valid. Okay, always wait for it. You can see here we have a run below this low. Okay, and here we have a run below this low and this low. Okay, so that is your smart money reversal. Okay, so you can go short, once you can go long once you have that sweep. This is a turtle soup. You can go long right there and use a 30 pip stop loss and wait for price to take out that initial high. Okay, so this is not something that I'm saying in hindsight. I posted it on the group chat that I'm looking for price to take out this high. I'm anticipating a market maker. If on my Telegram channel, I posted all of this. Unfortunately, for most of this, I haven't been making money from it. Either because I FOMO in a bit too early or I get out too early. Okay, so and that's I'm giving myself time. Okay, I know that with time I will learn to trust this model and let it play out. Okay, every single time I get out too early or I enter too early, I don't wait for the typical signatures of this the different stages of this model to play out. I tend to regret it because eventually what I initially anticipated is always what plays out. Okay, so initially, this was what I was anticipating for price to take out this low, and I was looking to go long in here because I was thinking that maybe it wouldn't play out. and it did. Okay, so what you would need to learn as a trader is, especially if you're a developing trader, is learning to submit to the model and be patient and let it play out. Okay, so here we have initial consolidation run to, let me delete this. So here, initial consolidation run to a level of support. Here, this is a daily fair value gap, and then daily fair value gap failed to hold price and then it runs away. Here we have the smart money reversal, the typical signature of the smart money reversal, like I said, SMT divergence, and then it run on stop. Okay, and then after that, price will run away to form the low risk buy. Okay, the low risk buy usually would be a return to an order block, like in this case, or a return to a fair value gap, or a return to the low, to the high of the initial consolidation. Okay, so the what is it called, smart money reversal. Okay, if sometimes it may come all the way to this level. Okay, so the high that forms before the move away, it may come back down to retest it before it then runs away. Sometimes if there is an order block before that level, to return to the other block before running away. Okay, but typically the typical signature of this level and this level is that there will be an aggressive move away. Okay, like you have in here, in here, in here, there will be that aggressive move. Okay, so you have the initial, you have the low risk buy. That is the first stage of accumulation, and then you have the second stage of accumulation just before that high is taken out, and then the last stage is when the high is taken out. Okay, so consolidation, run to support, smart money reversal, low risk buy or accumulation, reaccumulation, and then distribution. Okay, so that's another example. Let me show you another example. This is another one that I saw before it happened. Okay, there is a daily fair value gap at this level. Okay, let me just go to the daily time frame first. Let me cut this down into um okay, we go to the daily time frame. You see this daily fair value gap. Okay, so let me use a different color so that we're able to differentiate. Okay, so let me go back to the 1 hour time frame. This is the initial consolidation. Okay, I remember on Monday, I was looking for price to trade down into this fair value gap, close it, and then we'll look to go long to fill the weekly fair value gap. There is a weekly fair value gap at this level. Okay, I don't want to go I don't want videos to be too long, okay? So, but if you go to the weekly time frame, if you go into your chart, there is a weekly fair value gap at this level. So I was waiting on Monday. I wanted price to trade down into this fair value gap to go long. Okay, but price basically failed to. And then we have this consolidation and then aggressive move away. So when it failed to move into this level on Monday, I knew right away that we have a market maker sell model out. Okay, so this is the initial consolidation, and then we have the run into a level of resistance is a daily fair value gap. Okay, there is a daily fair value gap right there. And we have the smart money reversal. Remember, I mentioned that the smart money reversal, the typical signature you would see is there will be a run on stop, okay, which is pretty much what happened in here. You can see that run above the previous day high for a Wednesday high of the week. Okay, so smart money reversal right there. There is also an SMT divergence. Let me show you. Um, I think somewhere there. Okay, so you can see this guy made a higher high, this guy made a lower low. Okay, so that's a typical signature of the smart money reversal. Okay, you can see the initial consolidation here, then run to a level of resistance, smart money reversal, accumulation or low risk buy, reaccumulation, and then distribution below the initial low of the consolidation. Okay, so let me just complete this. This is, the low risk sell is usually going to be a return into an order block. You can see this order block right here. Return into the order block. You also have a fair value gap at this level as well. Okay, so this is the low risk sell or accumulation and then reaccumulation and then distribution. It's usually aggressive. Okay, distribution at that level where at that fair value gap where you are looking to go long initially. And once price return to that level, you begin to anticipate another market maker buy model to take out the initial high or at least to return back into premium, right? So that's the model. I hope that is simple enough. Let me show you another example. Now, these are all recent price action. These are things that I shared on the group chat even before it happens. Okay, this move right here, I posted on the group chat. I'm anticipating a market maker sell model to take out this low and fill the daily fair value gap. Well, the mistake I made in here is I was looking for bearish continuation, because price has been bearish, and I felt like, okay, well, price is going to continue downward to take out this low. However, whenever you see this, price forms a fair value gap, or there is a low, there is a high, and then price fails to drop into discount before moving up. Okay, anticipate a sell model to take out that low, fill the fair value gap, come back to that discount level, and anticipate a long. Okay, because basically what the algorithm is doing here is that it wants to give smart money the chance to accumulate longs. Okay, so all these lows, short-term lows, they were accumulating there, accumulating, and then this is like the highest or the lowest discount level where they can accumulate. Okay, so this impulsive move that happened in here, so this displacement that happened here, okay, that's like, smart money tilting the hand. That's the algorithm tilting the hand that, you know um that is smart money reversal. Okay, and there was also a an SMT divergence at this level as well. So I was looking to go short. I was waiting for price to trade to this level to go short, and I got stopped out. Okay, immediately I knew that this high is going to be taken, and the following week I was looking to go long for price to drop into that 4-hour fair value gap that I mentioned in the previous example, to go long to take out that high. It failed to do the same, pretty much the same thing that happened here. Okay, consolidated and then ran away without dropping into the fair value gap. Okay, pretty much the same thing that happened on the 4-hour time frame. The fair value gap on the 4-hour time frame. In the example I showed previously, okay, you can go back and check. All right, pretty much the same thing is what happened. Consolidation just before the fair value gap. Consolidation also just before the fair value gap. All right. So let me see if I can still show you more examples. Let me use the 4-hour here. Now, remember I mentioned that the initial consolidation, okay, can be a small area of consolidation or an extended area of consolidation. Okay, so this is the example we looked at. This is another example. This is another example. See, price basically moves from market maker buy model to market maker sell model to market maker buy model. It repeats like that. Okay, it repeats. All right, and sometimes you can have a sell model inside another buy model. You can have a buy model inside another sell model. Okay, so I remember taking a short here because I anticipated this smart money reversal. Okay, so if you go to this is initial consolidation, you have this level of consolidation right there, and then you run into a level of resistance. Remember, I mentioned that price may come back to retest the high of the consolidation and then run away all of a sudden. That's the typical signature of the second stage. Okay, price will retrace a little bit and then run away all of a sudden. Okay, so this run away gives it away. Okay, so that's the run to resistance, and then smart money reversal, SMT divergence. Okay, if you go to GU, you would see that GU made a higher high at this level. Okay, let me show you. Let me show you right here. Okay, right here. That is a higher high that GU made, and EU made a lower high. Okay, so that's the typical signature of smart money reversal. Okay, um, usually to run a high. In this case, it didn't really run a high. Well, it ran this high before. And initially, I was looking at this level for my smart money reversal. Okay, I was looking at this level. I remember I took this shot. It was a sweet, beautiful shot, and I closed the trade somewhere around here. Okay, so I was anticipating smart money reversal here, but when I remembered that smart money reversal, the typical signature is there has to be a run on stop. Okay, so this high that it made, when it goes to low time frame, there was actually a break of structure to the downside. I think on the 1 hour or 15-minute thereabout. And I wanted to go short, but I remembered that there haven't been a run on stop. Okay, so the typical signature of the smart money reversal, like I've been emphasizing since, is the smart money reverse is the run and stop. So there was a run and stop here, and then there was SMT divergence. When I saw that SMT divergence, I was extremely confident about the trade. I went short and I took profits. It was during CPI, okay? So I went short just before CPI, and you can see the aggressive move that happened. Okay, so run to resistance, smart money reversal here. Here, there is no accumulation, okay? That's why I'm saying that sometimes you won't see all the stages. Ideally, you want to wait for price to trade into this level, but there wasn't accumulation. Instead, there was re-accumulation and then distribution below the low, right? So that's another example of the sell model. Let me give you one more example. This right here, this is initial consolidation. This is a run to support. This is smart money reversal. What is the typical signature of smart money reversal? A run on stop. This is a monthly low if you go back in time. And price also ran this low. Okay. And there is also SMT divergence. Okay. I know this because I traded this live. I went long here. No, it's really quite funny. It's one thing to know what price will do, it's another thing to submit to price and let it play out. I can remember I went long in here and then I closed it at break even because of fear. And see the move that eventually happened after. All right, so this is smart money reversal. If you go to GU, you see that GU failed to make a lower low. Okay, it's made a higher high. It didn't make a lower low. It made a higher low rather. A higher low didn't take out this low. Why EU took out the low, and that gives you your smart money reversal. You have the first level of accumulation. You have the second level of accumulation, which is reaccumulation, and then distribution to take out this high. Okay, that's what I'm saying. Sometimes it will not take out that high. Sometimes that level, price will reverse to come back down to take out this low. Okay, or return back into discount for another leg up to come back to take out that high. Okay, so these are the different scenarios that tend to play out. Okay, so whenever that initial consolidation is not taken, okay, you wait for price to trade back into discount, and then you begin to anticipate another market maker buy model that will take out this high and this high. That was why I was bullish, okay, at this level, and I wanted price to take out this high and this high when I posted it on the Telegram chart. Right, that was what I saw, because this is an initial consolidation, run to support, smart money reversal, accumulation, reaccumulation, distribution should take out this high. When it fails to, you begin to anticipate another market maker buy model. You consider this to be the initial consolidation or this. Okay, then run to support, smart money reversal, accumulation, reaccumulation, and then distribution to take out these two highs. Okay, so when a model does not complete, you begin to anticipate an opposite model that will come back to complete it and then reverse. Okay, I hope I've done justice to this. If you have question, feel free to drop your question. There are a lot of examples. I can go back in time and show you lots and lots and lots and lots and lots and lots of examples. Even on BTC, let me show you the XY. Okay, I've been bullish on DXY. The reason I've been bullish on DXY is because I saw a market maker sell model playing out on the monthly time frame. Okay, this is the initial consolidation. Here we have the run into resistance. That is a run into resistance. Remember I said we're going to have a retracement. Sometimes price may come back down to retest the initial consolidation. So there is a good chance that BTC might bounce here or bounce at this level to come back up to take out this high. Okay, so 120 plus or 121 plus is still my long-term target for DXY. Okay, that's why I have been saying that GU would most likely reach parity with the dollar. Okay, so this is the run to resistance. Okay, this is a run to resistance, and then we will be anticipating smart money reversal at this level, and then we'll have accumulation, reaccumulation, and then distribution to fill this fair value gap. So if you look at this again, you can see that price formed a fair value gap from this low to this high. Optimal trade entry is around this level. It failed to drop, or even if you use from this low to this high, optimal trade level is around this level. It failed to drop into it. Instead, it consolidated, and then run away to a level of resistance. Okay, this is a run to resistance. Okay, so by the time BTC bottoms here, we will see an aggressive run to take out this high and this high, where we then have smart money reversal, then we have accumulation, reaccumulation, and then distribution below this low. Okay, that's pretty much what is going to play out on BTC. Again, if you have any question, feel free to drop your question in the comment section, or you can drop them on the Telegram chat. All right, I'll be happy to answer them. All right, I will see you guys in the next video.